In this video, we're going to be going through the Sunshine Coast and having a look at the leading indicators to see if it's poised for a second boom. Before we go through any particulars, just a quick warning. This is not financial advice. Please seek the counsel of a financial advisor, legal professional, and mortgage broker before you go acting on any of the decisions in this content. I'm a qualified property investment advisor through the Property Investment Professionals of Australia. If you're looking for specific property advice, please don't hesitate to reach out. If you're looking for any other advice, then I strongly recommend that you reach out to a financial services professional. So without any further ado, let's kick on. House prices in the Sunshine Coast have been experiencing a couple of rises over the last few years, especially around COVID. We see that house prices went from around about 600,000 for 3-bedroom or all homes to the 950 mark in the space of a few years. So there was quite a large jump there. Then according to SQM research, prices have jumped again. And we're looking at prices of around about 900,000 there in the beginning of 2024. And we're all the way up to around about $1.2 million as of October 2025. In terms of overall rental yields have slid somewhat. We're looking at around about the 4% mark for 3-bedroom homes and then roughly 3.5% for all homes. Now, the reason why we're seeing rental yields fall is not because rents are falling, it's because that or house price growth rather is exceeding the growth of rental prices. In terms of weekly rents, get rid of the units here. Rents over the last few years have grown from around about the 450, 500 mark there, all the way up to around about 750, just under $800 per week. We're looking at both 3-bedroom homes and all homes as well. So you can see comparatively, rents have risen, although they haven't risen at the same rate as capital growth. And that's why we're seeing a slide in the overall rental yield there. In terms of property listings during COVID were driven down. They came back up over the 2022-2023 period here. And now we're starting to see a gradual trend down. They're at their lowest here since roughly 2021 there. You can see that property listings slid off a bit of a cliff there. And now we're at levels not seen since 2021. So there is definitely a shortage in the overall supply of property. In terms of rental listings, very similar story here. You can see there that halfway through 2020, rental listings fell off a cliff and there was an ultra low supply of rental listings there for a long time. We've had a couple of peaks here, namely in 2023, 2024, and again in 2025, but rental listings are trending higher overall. You can see a rough trend line there. Since the bottom 2021, roughly, since January 2021, they've been slightly increasing there at an overall trend, aside from a couple of peaks. In terms of vacancy rates, they're trending higher, similar to the number of weekly rental listings. You can see there just at the beginning of 2021, we were at a vacancy rate of around about 0.5%. Now we're looking at a vacancy rate of 1%. So vacancy rate again has been trending higher. When we look at the capital value of current houses in the area, you can see there your Mooloolaba area is sitting at around about 1.6. Maroochydore is sitting about 1.15, which is the rough median of the Sunshine Coast there. And we're seeing other areas like Pereira at 1.5, and we're seeing Minyama at $2.2 million there. These are your coastal areas. Your more residential areas here around Tanawa and Buderim are sitting at around about $1.3 million. In terms of house price growth over the last 12 months, Mooloolaba has actually decreased in value, albeit meager, by 0.6%. Aside from that, other areas have been increasing by roughly 6 to 12% over a 12-month period. Some of your coastal suburbs here like Marcola and Maroochydore have been anywhere between 0 and 6% over the last 12 months. If we look at the median weekly rent in most areas is going to set you back around about anywhere between $800 and $1,000 per week. We can see some of the more residential areas like Merredin Plains at $800, Buderim at $960, Maroochydore at $836. And then as we start to head a little bit away from the coast around Wambi, at $765. In terms of rental growth, most areas have seen rental growth of around about 5 to 10%. Again, your coastal areas like Mooloolaba and Maroochydore are a little bit lower at 0 to 5% over the last 12 months. This is an example property that has recently sold in the area. It's in Maroochydore. It's a 4-bed, 2-bath, 2-car house that sold for 1.032 around about a month or so ago. This probably looks like a rendered Besser brick. Very sort of average fittings and fixtures, fan, reverse cycle air conditioning in most rooms, fairly average fitting and fixtures in the bathroom, about 400 square meters overall land area. And you can see it's not too far from the CBD and coastal areas there. So if you look at the cash flow for something like this using the ROI calculator and cash flow spreadsheet, again, $1,032 purchase price, stamp duty is roughly $46,000. Then you've got your legals, building and pest, and like to cater for a little bit of other upfront costs, whether it be a full bond clean, whether it be a compliance certificate, whether it be a portion of fees, we'll add a couple of grand to take care of that. A deposit, roughly 20% is 260. The deposit and upfront funds needed to complete the purchase on something like this is roughly 260,000. That will take care of your stamp duty, upfront costs, and 20%. LVR of 80%, assuming a 6% loan, 30-year term, and an expected rent of 800, which is probably the max you'd expect to receive. Let's notch that down to around about 750, even 720. That'll get us to around about 3.5%, a little bit lower, 700. That'll get us to around 3.5%, which is the base rate of what we'd be expecting in the area. Property management expected expenses would be about 8.8. Now we can assume, we might be able to get it for a little bit cheaper, but it's always good to err on the side of over rather than under. Your expenses overall are going to be around about 2,500 for council. We'll budget about 800 for water. Assume insurance, depending on your insurance provider and your levels of cover, at around about 2,500. And then again, budgeted incidentals, maintenance, the odd insurance, the odd compliance certificate or maintenance requirement at around about $2,000 per year. You're looking at a total annual surplus or deficit. In this case, it's a deficit of $24,000 per annum. So you're looking at roughly $2,000 per month, assuming interest only. If it is principal and interest, then you are looking at $34,000. Based on your interest only, your ROI is going to be minus 9%. Now, just taking a quick look here in the Sunshine Coast, the average annual price growth is around about 9.3% over a 10-year period. So using those long-term averages, we can assume that even on the side of caution, we'll use an assumption rate of 8% in terms of price growth. And then we can also see here over the long-term averages, rents have been rising at around about 5 to 6% there. So again, we'll err on the side of underquoting here for projection's sake at 5%. Okay, so long-term capital growth at 8%, expenses overquoting at 4%. We've got rental growth at 5%, capital growth at 8%, loan interest rate of 6%. We've got a purchase price of $1,032,000. Rent at 720, a loan of 824, and expenses at 11,000. So something like this, we can expect to be cash flow even before any tax depreciation or negative gearing benefits in the year 2038, 16 years after we purchase the property. In the year 2030, we can expect $300,000 in equity, total usable equity that we can pull out of the property, providing that we meet serviceability requirements and use to buy another investment property. And overall, we can see in the year 2045, we'll have a total equity value of $3.6 million, assuming that long-term capital growth is achieved at the 8% mark in the year 2045. So thank you everybody for watching. I hope you've taken something away from this video. If you do have any questions, please don't hesitate to reach out. I'd love to have a chat with you. Otherwise, feel free to book in a free strategy session to understand how property can help you meet your goals of financial freedom, passive income, retiring comfortably, helping you get into your dream home, all of the above. I'd love to have a chat with you further.